The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This 21st day of November. Gosh, almost done with November. And what a market. This is quite an not a surprise in the sense that if you're looking at my chart of the Dow, and subscribers know that I'd drawn this some time ago. I'd shown that there was a Chapman wave stalk leg formation that was forming. I even typed in the leg, the body, showed the oval pattern. And what happens with this is that there's a spike above the previous high. How high it is, you don't really know. That's not the issue. The issue is that the stochastic and MACD have been absolutely outstanding. And if you're looking at chart formations, it's all very well to know your chart formations, it's all very well to know your candles. But if you can add certain ingredients to your pie so that you can really look at the smorgasbord of opportunity and techniques, it allows you to at least stay in position longer than you normally would expect. Now, is this a blow-off top just on a very short-term basis? I think that we are really close. I've been saying that for about a week and a half now, 2 weeks, that we're getting real close to some kind of consolidation. But we won't know until I get the signal, and I haven't got the signal yet. Will I get the signal in the 120-minute chart? We'll see. But in the meantime, back at the ranch, look what happened. This is options expiration day. And what I had said to my subscribers this morning to my opening call, because we are only long, we do not have any shorts, but we are really close to starting to think about implementing some shorts. And yesterday I did do an update, and we added a position which has done really well from that level that we added it yesterday. But I'm not sure if it's even going to hold because it was needing to make certain legs in the Chapman wave. We'll see what happens. But most importantly, what I'm looking at here is that there is a chance, because it happened within 3 bars, that the peak D in the Chapman wave, I'm getting a little, this is technical Friday, so forgive me if I get a little technical, but there are a lot of people out there using the Chapman wave methodology. And you remember when I had, we had the ad up on TFNN months ago when I was going to have that first week of September webinar, and I said it's going to be such an important moment because a lot of things are happening right now, and we could be looking at chart patterns that might form from this moment on. In fact, lo and behold, a week later I had that sell signal. A little more than a week later, at September the 21st, 22nd, went short the S&P via the 300% short, and then we also went long the S&P just after the turn on October the 15th, around about the 16th, 17th. Now, what's really important is that we got stopped out for a very nice profit, but nothing like it would have been at the high today, just 2 days ago. And now, am I in this position of saying, oh, my goodness, do I need to get back in? Do I need to look at the short side? What should I be doing? Well, fortunately, because we have other positions and we have a mixed portfolio of financials, gold stock, high tech, what can we call it? Probably call it a whole high tech wholesaler. That's the only way we can call it. I can't even remember right now. We have an auto company. We are really all the way around this particular economy, and that to me is really important. It's one of the reasons why I wanted to stay long, even though I'm lightening up on some of the positions. Pharmaceutical, a drugstore. This is an interesting phase. I did miss getting right back in. We had a nice position in the biotech sector, which I think is getting very overbought, and I say that we want to buy it on a pullback at a certain time. I don't think we got it at that particular time. We'll see. I just can't remember offhand. Do I have it in front of me? Only because bye-bye 11:10. At what point? Did I do that correctly? Oh, that's very interesting. So let me just double check here. Lo and behold, we did get that. Good. We've got it, and we've got a very, very tight stop on it. 1.5%, I think, maybe under 2%, and we've made quite a bit of money on that already. Let's see if this is going to work. Why? Because I'm expecting that the sectors that fail to make their leg Ds in the Chapman wave buy mode will still do it somehow or other before Thanksgiving. That's kind of what I'm thinking. So in the meantime, the weekly close today is going to be quite important, but it's absolutely imperative that next week on Friday, we'll see what happens. Is there a peak made with a lower high bar all next week? A lot of things are going on. Meantime, back at the ranch, I'll be explaining over the weekend exactly what we're expecting from this Chapman wave stalk leg formation for my subscribers. Let me just pull this down because I want to see where the volatility index went. The volatility index is down at 13.48. This is unbelievable that it came back so quickly from yesterday's high. I wonder if that was a print error at 15.74. I'm not sure. But look at that big spike. This is leg D in the 120-minute chart. Every day I show my subscribers. I wonder if I can find it right now. Look, this is a very good opportunity because you need to, I'd like you to see, here we go, right there. So this is what I show my subscribers. Let me slide it over right there. There's just one of the half a dozen or more pages that I send off every day, but you only need to be looking at the Dow chart. That's just right here. I wonder if I've still got it up there. The Dow chart with all the explanations that here we go. There are. Nope, not this one. Oh, I blipped it off, huh? Not there, there it is. That Dow chart is what I show my subscribers. That's where we were, and this is where we are that I just showed you a moment ago. Dow up 124, having gone all the way to the 17,870s, I believe. Okay, so that's one thing, and I have that little paragraph that you saw, but I also add a whole bunch of things in there. I discussed a little bit about the Chapman wave unfolding, etc. This is the neck formation. Then we get the head, and we get the beak. Beak comes all the way back down to test, in this case, a 17,705 breakout. Not a big deal. It's not very far away, but hey, that's the way it works. Then I show the overview. Overview section is right here. And this is what I explain. This is what I'm looking at today. If the Dow, this is what I always end up with, what you can expect today. I've been making a Dow call for the last 30-something years, every single day, even when I'm on vacation, unless, of course, I can't do it, but pretty much almost every market day. And then at the very bottom, I show today if the Dow is plus 50s, S&P's plus 7s, and comp index is plus 15s around noon, there could be a really good all-time high close. Looks like the futures are up sharply. And what was really important about that is, and then I go with all my different, I show the E-minis. I wonder if I can show that now. Where's the E-mini, right? Is that the E-mini? Yes, that's the E-mini. Every day I show the 120-minute chart over there on the right and the daily chart. Now, this is interesting. I call that peak C. And if you look at the real thing right now, this is the E-mini right now, right here. It's at peak C. Is it going to make a D above 2,072.25 probably by Monday or so? I think there's a good chance that we're going to have one more flow to the upside. Just really fool the bears altogether, especially those people who went short right at the opening, which normally would be a good thing to do because you get that single leg A spike. But there is just so many. I got the question in the den. All your friends who you play tennis with, are they now getting back into the market? All the ones who got out in 2007, 2008, 2009, 2010. I don't know. The people that I play with are the summer people, and I have a different crowd for the winter time indoors. I'll find out. I'll let you know. I've already started to get a couple of emails from people who either have missed it and want to know what to do, or have actually been short, even though they know I went long and they've stayed short, and they're just wondering how on earth. One person just sold out the QID today. Shame. He's a very good. So I remember him being a very good trader. I'm not sure what happened, but just he couldn't take the pain. 10% loss on one of those things. It's a big loss. You got to make up a lot, especially if you've been out the market for a while and then get back in. So in the meantime, back at the ranch, it's very frustrating for those people who are underinvested, saying, "What can I do right now?" Well, there's certain certain things you can do. You can start small positions. You take a loss on small positions. If they're good stocks, they will get back to that particular level. Don't be afraid. All right, let me give you the numbers, and then I can't even remember why I moved over to the future. Oh, because this is what I show my subscribers every day. I don't give a buy or sell. That would be a whole new thing if I was to do that. I do give you the direction. I give you exactly what we're looking at and why we're looking at it. It really helps because this is almost 24 hours a day. It really gives you a feel for what's going on. So now let me go through a couple of things here. The Dow is up 126 at 17,845. The S&P is up 13 at 2,000 and is that a 60? Yep, 66. The comp index is up 24 at 47.28. And this is going to be very interesting. The VIX is down at 13.47. Now, I want you to look at one particular thing because it'll tell me, oh, yes. I'm anticipating, based on the Chapman wave, and now this... It might not work because on options expiration Friday, there is a chance that you don't get, it's the only time it's failed is twice over the last 2 or 3 years that I can think of where it really gave a fantastic signal. But the one time, this particular index says that the very next session should have a down early morning in the Dow, and then the rally should be attempted. That's what it says, and that's what's flashing right now. One time that it didn't work, the Dow had exactly what happened right now, a huge gap up opening, and then it plunged from like up 175, up 225 to up 35 or up 40, and then closed up for the day. So it did everything because the rule of this particular Chapman wave trend gauge, which is not based at all on Richard Arms, who invented this particular technique, it isn't based at all on his methodology. It's only based on price. So I've developed my own way of reading it. So in that particular instance, it says there's a really good chance that we should have some weakness early on Monday. So we've been watching that. All right. So let's go on. And then I explained for my subscribers each one of those quintiles, what's happening in the 120-minute chart on the left, over there, what's happening here. So let me just type in here. This is D. So D says you've got to be a little bit careful, and that kind of coincides with what I'm looking at as a potential slight weakness. Oh, it doesn't mean slight. It just means there will be weakness. Doesn't tell you how much at the open, early in the morning, after the opening, and in the Dow. And then there's a rally attempt. Whether it succeeds or not, that's a whole new bunch of techniques. And then this one here is the 120-minute chart of the VIX, peak F. Plop 1574 goes all the way down to 1347 now. Unbelievable. And let's see what we've got. What's the low of the day? The low of the day is 1314. This here is the trend gauge. This is really Richard Arms' trend gauge. My reading is something else. And this is leg F/B in the Dow. This is F/B in the S&P. So let me just finish up here quickly as we go to the break. And I'll tell you that gold is right now, gold is up $13 at 1204. Silver is up. High-grade copper is bouncing nicely. And you've got bonds up 7.30 seconds at 141.25 seconds. Basil Chapman, I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. A couple of messages came in while I was there on break. Two very interesting. One is just got something that said was in L.A. Just got back from L.A. Exciting place with lots happening. Saw 5 Bugattis within 5 hours, which is amazing in itself. And young kids driving around in expensive cars. Well, that in itself for L.A. is, it's kind of what you expect at times. L.A. is a place where there are a lot of people, especially in the movie business, that are doing not just well, but extraordinarily well. And that's what it's when you're around here, and you're in a parking lot, and you see a Bentley or you see a Ferrari. I mean, then you start saying to yourself, it isn't that you're seeing the car. That's really not the issue at all. It is that there are people who are displaying their wealth. The whole idea of my mega moves is the display of wealth. Peter Lynch used to go to work in his, I don't know what it was, his old Chev or something like that. It was really an old car. People used to say, well, what, he was one of the wealthiest guys around here. He was the mutual fund guy, and with Fidelity. And he was very modest, and that was the kind of the New England thing in a way. But the issue is the display of wealth. like those peacocks. I'll never forget, there was in South Africa once, we were at the zoo, it was quite some time ago, and suddenly we saw these two birds coming towards us, and one in particular, and then it just splayed out its feathers. It turns out it's called the secretary bird. I think it's called the secretary bird. They probably wouldn't use that term today, but it was called the secretary bird. And it was, the reason was it was dressed kind of appropriately, as if in those days that's how secretaries dressed. And whenever I see it, it's, you know, peacock's displays. It has other reasons for doing it, but the fact is, it's almost the same thing when people display. And that, you know, this is not a commentary on whether they should or they shouldn't. All I'm saying is that when this happens, you are starting to get real close to hubris, where you are thumbing your nose and saying, look what I've got, and that bravura display comes back and smacks you on the nose. That's what I think. But there are many people that just do it because they love the look of a particular car. There's different reasons altogether. I'm talking about when people do it as a status symbol. Those are two psychologically different things completely. I mean, I got a neighbor just 2 doors away who has a Maserati. He loves the car. I mean, I haven't even spoken to him much about it except once. He loves it. Well, I can hear it at 4:30 in the morning when he goes off to catch his flight to wherever it is that he goes around the country. But that's different. And but what we're talking about here is this arrogance, this kind of, look what I've done, look how well I've done. If it's displayed as thumbing your nose at others, that's not good. And this is the era, this is the phase that we're going into. It's ironic that you've got this kind of down with Wall Street, young people down with Wall Street, and then you've got another crowd that are just, they will do anything to make the big bucks. And there's going to be a fight. And I spoke about it just the other night, about what could happen if there's a real attack on capitalism over the next few years. We'll see. Anyway, let's get back to the market. So I wanted to show you, I've got the dollar up here. This, the left side is the daily. The right side is the peak D if there's no new high bar today. That's going to be tough for the dollar to get to 88.28. It's at 88.12. I shouldn't have said it's tough. If it doesn't do it real soon, it won't make it. And that might turn out to be, now let me get rid of this just for a moment, and I'll show you what I do. I love when I'm looking at patterns, and the pattern makes itself obvious. So I'm going to take this away. What are you staring at when you're looking at it? Remember, this is Technical Friday. What are you staring at? I'm staring at basically a strong leg up that has every sign right now of making the oval pattern right there, because it's got a lower high, a higher high, a lower high at the top. You want to have the oval formation, which could turn out to be the arch formation, but there are two patterns that are vying for one another. The one is this little cup pattern, the drop bucket double top pattern, and the other is a breakout in the stalk leg, which looks like what? It looks like, I'll leave you with this as we go to the break. It's the stalk leg formation. I'll be back. Dow's up 120, S&P's up 13. Basil Chapman, call in 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the Dow is up 120, S&P's up 13, Comp Index is up 23. And here's the dollar. I just wanted to show you. Look, here are the different patterns. Well, I've been talking about the dollar for some time. I showed you the 1-to-1 expansion that we got right there, the green line. This is back in August of this year. It went to 82.54, and then it broke out and it made the pattern. There it is, the leg, the body, the neck, the head. But this time, instead of making the beak, it started a brand new, a second sideways move that I call the body, and then a third one. And then finally it went up to 86.75 and pulled back for the dollar. This is the deepest correction it had from peak D in the Chapman wave to 84.47. Then it started this brand new move. Now it's made this oval pattern. Will it do it yet again? Well, the patterns we're looking at, whereas before this, the MACD did not break down and close lower, this time the MACD is just up underneath the red line, that fast-moving edge underneath the red line, trying to get back, and the stochastic has gone from way into the from the 85 area. Let me just see where it is. Let's see, wrong one. So that goes right there. So yeah, so the stochastic was up in the 91% area. Now it's at 71%. So the dollar's moving up on its own strength, but it hasn't got the technicals right at this moment, but it's holding that black line, the 9-period moving average. So yes, there was I mentioned in the den that it could be a head and shoulders. This is not really what I call the classic head and shoulders pattern at the moment, but if it was to break down, it would do it immediately Sunday night into Monday. The dollar comes down, gold goes up. We'll talk about that in a moment, but first we're going to go to our first caller. We got Brent in Martinez, California. Brent, how are you?
I'm doing just great, Basil. How are you today?
I'm well, thank you. You'd like to look at?
If you could take a look at silver, please. I guess do the daily and maybe even weekly counts on it, if you could, please.
Okay, I'm looking at the continuous contract just for now. This is leg D up. Now, this is very interesting because the GLD has just made a leg D. Let me just get this organized here. Folks, we're looking at the continuous contract of silver. I'll go to the contract itself, but I get a tremendous amount of information out of my continuous contracts, even though the prices are different, but the patterns are invariably pretty much the same. It went to an E trough in the weekly chart. It's acting quite nicely, not great, but very nice. On the way down, you see the ugly candles from way back on October the 30th, then the 31st, and then again on the November the 5th. Just horrible candles. Now it's taking a very orderly move to the upside. That I like because it makes the weekly chart, it allows the technicals in the weekly chart to steadily move up instead of having a sudden move that starts to fail very quickly. This is just methodical. But until silver closes, this is the continuous contract, trading at 655, and right now silver itself is at 655. So they're pretty much matching. Oh no, I shouldn't say that. It's SI. I'm not sure what. I'm going to go to F contract. That's January. Let's see if that's going to. Whoops! I didn't need to write it there. Give me 1 second. SIF 15. Yes, very good. Trading at 1657, and we were looking at silver at 1655, really close. That's good enough for me. So I'm going to go back to the continuous contract, and what I'm going to suggest, I'd been looking way back that probably the best time that we could see a decent rally in silver, or gold actually is really what I was talking about earlier on, was probably in the November to December period. Well, we're right there. We're in the November-December period now. But it's the way that the dollar is holding up that is very, very important. Why? Because, yes, there are moments, and I don't have a chart in front of me. I do have the chart, but I just haven't got it in front of me. There are moments where the dollar and gold go together, but it isn't that often. I used to show that chart a lot of times over a period of months. I haven't had a need to do that. But if you see in the silver contract, it's way underneath the 200-period exponential moving average. I'm going to get rid of this. This is the Fibonacci expansion, which has 17.34 is the 161.8 expansion. I just want to get rid of it because I usually use this just to know more or less where the prices could go. Other people around you use the Fibonacci's really to the penny very well. I tend to use it as just another one of my resources. But I'm looking at this and I'm saying, okay, I'm very close with my Chapman. This goes to the question that I just had as an email about the TRIN index. The person sent it and Chris said, my read is morning dump within 2 days. Yeah, I think that we are not within 2 days. I think we're within next week. We should see some topping action in the market itself, and we should see the market start to pull back. Whether it comes back deeply or whether it's just a momentary pause because the weekly charts are so strong, I won't know until the pullback actually unfolds. And at that point, we are going to see whether or not the dollar, and if you don't mind, you asked me about silver, but I remember the other night someone was talking about gold. And I went to gold, and then I immediately, of course, went to the dollar, I went to the euro, and I could see this one person just rolling her eyes, saying, "Oh my God, there he goes, the guy. Can he not stick to one subject?" I can stick to one subject, but you have to understand that that one subject is really complementary or in opposition to other things. And if you don't see how they are impacted, it means that you could look at a single article and think that that is the whole thing, and it's not. So I don't want to do the dollar or the gold or any of these things just in isolation. What I will say is that the dollar right now needs to show, it's showing fantastic strength in the MACD in the weekly chart, and the monthly chart has improved tremendously technically. It is above the 200-period moving average. This is the dollar. The EUR USD has just had a plunge from a peak C, and I was talking about this, I think I did it on the show, I'm not sure, but I said it's just not a great looking chart. The USD JPY, and this all relates. I know that sometimes you want to think of them separately, excuse me, but I think of them as most of the time relating, and other times you've got to know that they are paralleling or diverging. In this case, the dollar Japanese yen currency pair has gone to a peak C. It could be an alternate count, could be a G. I'm going to be watching it closely to see if it breaks above 118.971. Why? Because that kind of corresponds to the way the dollar's acted. The USD JPY has gone all the way back to its major breakdown. That was back in the summer of 2007. And now it's almost back. It hasn't broken above 124.13. I suspect it will get there. Just as the dollar took so long to get back to its level of the 200-period exponential moving average, and now it's just a little bit above the levels of 89.62. No, it hasn't broken above that. 89.62 is the major resistance between 89.62, 88.71 and 89.72 are the resistance points, or 89.62 are the resistance points going back to 2009, 2010 in the dollar. So you can see it's starting to bump into that, and that should allow gold and silver right now. I'm going to go to the continuous contract. That should allow gold itself, because of the mechanism with which I count the peaks, is only in leg B. The GLD is in leg D. Let me go to the GLD now. Yep, the GLD just today spiked up to leg D. It's not a fantastic move going from the low that was most recently made at 109.67 to go only to 115.73 when it got smashed to the downside. But what is really impressive is it's broken the gap. It is in the weekly chart. No matter what happens at the end of the day today, it should close above the low of around about 114. It was met a couple of times. This is the last one, was in January, and that's the second week in a row. That is a positive. And if you look at the gold stocks have really awakened. They are. I'm looking at gold stocks and I'm saying, wow, nice breakout from the lows that we just saw. So now let me go back to you. Do you have any position in silver?
I do. I bought it a while ago. It's in the SLV, which is I think it's 10% of the silver contract.
So yeah,
actually that one's 100%. I think it's the GLD that's 10%.
Yes, I was just going to say the GLD is a tenth, trades at a tenth the price of spot gold. The silver contract, the SLV, trades almost exactly. It actually has. I've noticed that it has a slightly different chart pattern. It's like the UUP. It's not as successful in correlating exactly. It's very close, and it's also the only medium you've got to trade silver. That lay people can just trade silver that way, but you can't do anything overnight. Can you trade this overnight in your account, the SLV?
What I actually have, Basil, is they were just so dirt cheap as it had been beaten down,
calls.
Yeah, I bought calls February, $17 calls. They were less than 30 cents. I think I got them at 25 cents.
Wow, that's great. That's very good. So they're up over 100% right now. So, okay, so if that's the case, then that's more important that I look at it in a different way. I need to look at it as if what would be the lowest point that the SLV, that's the iShares Silver Trust, trading at 1587 up 27 cents. That's even with the dollar up. You've got gold and silver up. That's really important. I really think that I said last week was one of the most important weeks going into this week, and I really consider that it is. Number of reasons. I don't want to go into them now because I don't want to use up too much time because we're going to run out of time. But in your case, watch closely. 1552 to right there, to 1541. To 1541, that should be a very good containment area. If there's a close between 1524, that was the long one, that's up and down spike of the 19th just 3 days ago. If there's a close under it, I'm going to suggest to you, you'll still have a little premium left in your calls. I'm going to suggest that you watch it real closely. I would not take a loss in my call position for two reasons. Because the dollar strength that it showed today is something I don't want to dismiss, because the USD JPY dollar Japanese yen currency pair looks like it still wants to go to a D. And if the dollar breaks out to a new high, there could be, in fact, another interpretation, because this in fact could turn out to be not an F on the way up. It could have recycled to a new leg, maybe a leg B, I'm not sure. But if the stochastic and the MACD become strong, the dollar will not weaken right now. This is a very critical stage in the short term for the dollar, and therefore it will reflect the same way in gold and silver. So what you want to see, I'm going back to the SLV if you don't mind, because that's really what you're basing your option on. You want to see the SLV by Tuesday afternoon to Wednesday morning at about 11 next week, just before Thanksgiving, or going into the close of Thanksgiving. You want to see the SLV closer to the 16, going into that nice big gap. You want to see it closer to 16.05 to 16.15 without breaking below 1551. If it does that, that really will help the weekly chart, and that's the way you want to go, step by step. Peak E, leg E in the daily, leg A in the weekly. If it pulls back and then has another run over the next 2 weeks to the upside, that weekly is going to strengthen for the first time. I can see the stochastic and MACD having the power. If the SLV closes any week in the next 2 to 3 weeks above 1633, that'll be the best sign that I've seen in a long time. So I hope that helps you.
It does, Basil. You're absolutely correct. You have to follow the currencies in conjunction with I think, any of these commodity trades. So I really appreciate your help as always, and you just have a great weekend, and I hope I'll talk to you next week. You too. Thank you so much for calling. You always have some very interesting trades. Thank you for calling, Brent. Have a great weekend. So, folks, this is what I want to do. I'm going to look at, I had a couple of questions. I'm going to see, I had a question about the financials, XLF. We are long the financials. That's the XLF. Why? Because I expected in the Chapman Way methodology, you've gone to a B, and you want to now go to a C. I'm going to actually ask a question here, and what I'd like is maybe over the weekend, since this weekend I probably will have time to do things, I'm going to ask, for those of you who use the Chapman Wave methodology, if you have any specific questions, send me some questions. I'm probably going to regret saying this, but my email address here, TFNN, Basil Chapman at TFNN.com. Please send, I must say regret it, because these guys seem to listen all the time and just send the biggest junk over junk mail. But I would love to hear from you. Just some questions, I'd like to get to it. I'll give you back the chart plus the answer. I won't be able to, don't give me a lengthy thing. Just say, this is the problem, have I got it correct? And I'll explain it to you. And I'll be right back straight after this break. Yep, the Dow is now only up to 110. It's up 11. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back, and we're back with the Dow 111 S&P up at 11. Now, a couple of things. The QQQ series. You remember I spoke about the Chapman Wave stalk leg formation. What is a stalk leg? Simply put, it's a single line move. That could be made up of a number of peaks, but it's basically a strong move up that stalls and goes sideways for a little bit, creates an oval pattern, like this weekly chart of the QQQ series. Then it goes into the neck right there. That's the extension above the body. Then it forms the head and then the beak. And the beak very often goes underneath the high bar of importance. In this case, it was 97.62 in the QQQ Power Shares Trust Series. And it went even below the low bar. That was the body low. And it went right through the support level on October the 15th of the up channel. But then what happened? It turned around immediately, and it went 1, 2, doji candle, 3, 4, beautiful candles, and then it stopped right at that red line. And this is an alternate count. I've got it as a D, but this is one of the very few times in some of the weekly charts that I'm a little mystified. For instance, the DIA went to a peak. There's no other. I can't find other ways to count it except one particular way, which I really don't want to introduce. It's called the Chapman wave unconventional flat base restart. I don't want to get involved in that. So it's gone to an A and a B, and then it fails where the Dow made its high on the September the 19th, and the S&P comes back down to the October low. Is this a brand new leg A? That's really the issue. Is it an A? Because if it is an A, you have to buy the indices on every single pullback. Why? Because it should not break below the low of 158.27. Well, that's 20 points away. I'm not going to mess around for 20 points. So this is a tough decision for me. So we've been lightening up a little bit on the longs. We did add to the long position yesterday while getting stopped out of others, or at least partial stop outs. But we are still on the strongly on the buy side. Now, this applies to the daily chart. Is this a leg F? Or is this F/B with a Chapman wave instant restart right here? Well, I'm going to be spending some time on it, and hopefully by maybe Sunday or maybe even Sunday evening for Monday's opening call for my subscribers. Monday's opening call, I try my best to start getting out charts over the weekend, Saturday and Sunday. So you can peruse them, you can think about it. It gives you a heads up. Now, one of the things that I've say to people, I'm not very big on pushing my services. It's just the way it is. But one thing that I do mention to people is that I feel very strongly that the Chapman wave methodology keeps us almost always on the right track for a good portion of a year, every year. And if we're not on the right track for the actual indices, we're on the right track because we are on the long or the short side. And this might be one of the reasons, if you have a portfolio, a large portfolio, and you just don't know what to do, you don't have to take my advice for the actual thing, but it's worth reading every day. The commentary on the Dow, on the market, on the S&P, the Qs, and everything else, the Dow, because it gives you a sense. I've been saying this for 20 or 30 years. I like to keep you from hitting the Straits of Gibraltar. If anybody's ever seen those waves in that ocean between the Rock of Gibraltar and the mainland, it's tough going. And they used to have ships that would go down there all the time because they hit the rocks. And I try to get you through there without hitting the rocks. That's my major focus, is to try to get you through there. And, of course, we have had some really nice trades. So just check it out. It's a really good time to check out my opening calls, my daily service. You get 2 weeks free. In 2 weeks, believe me, you'll find out a lot of information. So I'll be back on Monday. Have a wonderful weekend. Stay tuned. You've got two wonderful, wonderful hosts coming up, living a primal life.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.